Bring in Michael Yoshikami from Destination Wealth Management, Keith Fitzgerald from Money Map Press, Frank Fantozzi from Planned Financial Services, and our own Rick Santelli. And Rick, I want to go to you on this important market day. Another one of those days where interest rates spiked early on. They've come back now, but we did hit, 283 on the 10-year note. What's going on there?
Well, to me, we call it the treasury market went hot. That means it's in new territory. It's carving out new range. It's most likely carving out a new high yield close. So even though Bob's exactly right, we are now 7 to 8 basis points off our high yield and only up 4 basis points on the day. It's an important 4 basis points because we're going to most likely usurp that July 5th 274 high yield close. When markets go hot, it's so hugely significant. They're proactive. Interest rates are moving the momentum gauge again into positive territory. It doesn't surprise me that stocks are reacting the way they are. But maybe the most important yet underreported bit of data today was Treasury International capital flows, the biggest monthly drop since 2007, we'll call it 6 years, close to $67 billion, and China and Japan both liquidated securities to the tune of $43 billion. I think that's important.
Yep.
Yeah, that's very important. Good point there. Michael Yoshikami, what do you want to do in a market that's down 217 points right here?
You need to continue to get conservative, Maria. The market's rallied a tremendous amount so far this year. It's interesting. The assets that have really been killed, I think, really, if you look at the S&P 500, the assets that have done well, for example, have been the beta assets, the high-risk assets. The assets that have been killed have been more conservative, dividend-paying, boring assets. We talk about how they've rallied, but frankly, if you have fixed income yields rising, as Rick actually has talked about, and I think that momentum comment he made was absolutely right on, where else are you going to go? I don't think you can go to REITs given what's happening with the building stocks, so I think you've got to go to more conservative defensive stocks. If you've got gains, if you've got Tesla and you made a killing on Tesla, it's time to take a little profit and put it in something that's going to give you some cash flow.
Keith Fitzgerald. No, go ahead, Maria.
I was just going to say, yes, you can look at this market and say, look, I'm up in the double digits in 2013. I might as well take some profits here. But you also might look at this market and say, wait a minute, something has changed. Cisco lays off 5% of its workforce. Walmart misses the quarter. Earnings are falling below estimates. So is it just a valuation story, or has something changed? Keith Fitzgerald.
I think that's a very interesting question, Maria. I don't know that it's just valuations. I think we're dealing with a cyclically weak time of the year. August is traditionally a time when people go on holiday. Volume lightens up, spreads widens, so that's part of it. Profit-taking near record levels is also normal. So the rotation that Rick spoke about, the prior guest spoke about, looking at that, I'm very conservative in here, but I'm also looking to buy, and I'm looking to buy in areas of technology that are related to sensors, big data, and energy is particularly appealing to me where I can get high income. Pipelines, for example, Kinder Morgan Partners. Looks like a good defensive yet offensive play here. I like cold hard cash.
Are we there yet? We're not down to levels that you would buy at yet, Keith?
No, I think, again, I'm nibbling in. I'm very happy to buy it here. I'm very happy to buy it a little lower, too.
What about you, Frank? You're looking for levels to get into as well, right?
Well, we feel that this is an important time to look at an opportunity to buy into the marketplace. It's just one bad day. And, we're actually looking ahead to the September, which usually the stock market has a more difficult time for the markets to operate in. You have a possible new Fed chairman going to be nominated. You have the budget issues coming up. So I think September is going to be more indicative of, I think, what's going to happen the rest of the year versus what's going to happen in the balance of August.
Yeah. What happened there, Maria? Somebody trying to close the market early?
I just want to point out, it would be nice if this market would close right now, right, guys?
Yeah,
just want to point out that the bell just rang. There's no one at the podium.
We're leaving.
Art Cashin. Who rang the bell? And what was that bell? Do we have any idea?
It was Arthur Godfrey. He heard about the
Hindenburg.
Exactly.
They fired him on the air there.
On it.
Hey, Bob Pisani, what's the mood on the floor there? A lot of guys there have been, we've been talking about this week. A lot of the guys on the floor have been talking about raising cash levels here. I guess they were a little prescient, weren't they?
Yes, and remember, the leverage is very, very high. In fact, we're essentially at near record highs. Hey, Rick, the guys down here want me to ask you your take on this. We've been talking about the fact that nobody can quite figure out what the right yield is on the 10-year. Considering growth is low, it's anemic, and considering inflation is reasonably well contained, at least by the Fed's definition, below 2%. Yeah. What's fair value for the 10-year right now? Is it 3%, 3.25%, or where should we be?
See, Bob, I just can't answer that. I could give you my ideas or opinions, but nobody can answer that. That's why I think that the Treasury market at this point in time, at least on this floor, is more important than the Fed and the taper. Because what I see is the bond market in a real marketplace trying to answer that question.
Yeah. Do you see the markets, though, Rick, acting a little more normal? I mean, we had this spike in gold. We had the VIX going higher. We had a comeback for the yields in the bond market as they started to buy into that after it hit that 283 market. But, I mean, everything seems to be acting somewhat normal today, don't you think?
Everything but stocks. And stocks, in my opinion, are now starting to act a whole lot more normal. I mean, look at treasuries. We see a drop in initial claims. Granted, it's not a leading indicator for jobs, but, you know, it's something people look at. The response, we shot up to 282, 283.
Right.
All this is normal, and I even think the way it came back is normal. And gold, listen, that gold spike, I can't tell you exactly what happened, but my guess is it wasn't somebody getting in, it was a short getting out. Those are always the ones that do it big and do it quick.
Bill, I just want to point out one thing, because I mentioned to you what Ralph Ekampora and I were talking about earlier.
Right.
And in the email that he sent me, I want to read you this quote. He says, I have advised those who have followed my bullish story for the last 4+ years that it would be prudent to take some profits off the table. God knows they have some terrific profits. Raise some cash to be deployed when I can identify the final low. Bottom line here is one of the biggest bulls out there saying we have not hit the final low.
And we have Ralph with us tomorrow, so we'll get some more. We'll kind of probe him a little more, figure out his thinking on this pullback here. Thank you guys for joining us, everybody. We'll see you later.
Thank you for having us on.
See you soon, guys. Thanks.